Okay, let's go. Morena tātou, everyone. Welcome to our Finance and Performance meeting. I will ask our lovely Deputy Mayor, Josh, to open with Karakia for us.
Me noi tātou. Tira marama nuku, tira marama rangi ko koe kei pauri te ngākau o tangata. Ka mā wete te ngākau o tangata. Tērā te tūwhiri ka tūwhiri. Tērā te tira marama ka tira marama. Hi koia te mahara tango he te atamai. Hei pau tūwhiri mau, hei pau kōrero mau, hei pau atamai mau. Tūturu, whiti whakamaua kia tīna. Haumi e uie.
Thank you for that. Good morning, everyone. You will see Rob emailed me this morning. He can't come and do the general submission, but Jules made a copy for everyone, and I promised Rob that I will read it out. Okay? So let's go to our apologies. Councillor Tupara.
And lateness for Councillor
Lateness, Councillor Parata, lateness. Do I have a mover? Yeah. Thank you. Seconder. All in favour? 3 carried. I need people to vote. Okay?
You're voting too.
Okay. Declarations of interest for today. And if you do forget after this step when we get to agenda item, please just let us know. It's very, very important. Okay, councillors, let's go to our confirmation of our non-confidential and confidential minutes, because they are only short minutes to incorporate. Someone willing to move our minutes as a true record? They were emailed out a long time ago by the lovely Dee. Moved by Councillor Telfer, seconded by Councillor Ria. All in favour? Carried. Okay. I am going to set out the expectations for the day. My plan is to work till 10:30, hopefully finish our agenda, and then we'll have a quick coffee break and then move on to our workshop. Okay, let us get cracking. So this is a very important bit. I'm taking everyone to page 17. I'm just lying because I haven't gone through the agenda. Hey, no leave of absence. Any acknowledgements or tributes that we missed? Someone wanted to make no public input and deputations. No, when we get to the paper. No extraordinary business. Notices of motion or adjourned business. So let us go to page 17. So as you can see, this is a very important part as you go through life. You realise that you might have policies in place and then cyclones happen and there might be people who we aren't able to help. Some people we were able to help through the Mayoral Relief Fund and that's wonderful, but there are some bespoke help that we want to offer people and we can't offer it if we don't have the paperwork in place. So I'll hand over to Pauline and then we'll open.
Yes, so this basically we've consulted with the community and also targeted those perhaps that were more directly impacted after Cyclone Gabrielle and our insurance policy. The policy itself has not changed fundamentally from what it was before, but we've added some clauses and added the ability to, where it is needed, to be able to act. The remissions policies is basically for unintended consequences for where we set our revenue and financing policy. And so basically those amendments, which has been identified within the background under 2, just those parts of the policies that have been noted in 4.4D and under a new section under 5. But overwhelmingly, those people that have responded support the changes with the policies per se. There was to be, as you said, one submission from Ms. McKenzie.
Yep. So I thought I would read this and then we will open. So this is from Rob. Thank you for allowing me the chance to speak today. Thank you also for your work during this term of council and for making the effort to be councillors. I want to use this time to particularise this topic to our case and how a rates remission would benefit us and others in our situation. I want also to suggest some ways that the process could be made more human for people already coping with the effects of a natural disaster or a forestry mediated one. Firstly, the policy should focus on the circumstances of the ratepayer rather than factors such as time limits or named events. We have paid rates at Parenga for 47 years, including the 18 months after Gabrielle. Since the forward and approaches were established by GDC, maintenance and day-to-day operation have been left to us by default. As we are the people on the spot, that makes sense. When the river goes down after a flood, we can clear the approaches and check the ford in a more efficient and timely manner than GDC, however it costs. In the past 18 months, we have had no action from GDC which lessened the daily burden on us. Terms of the access agreement for removal of the bridge had not been honoured. The ford was squashed by heavy machinery and not reinstated. Our emergency flying fox was destroyed and has never been properly reinstated, despite spending a horrendous amount of money. On the 16th of May 2025, I sent GDC an invoice for work completed on the ford as above, covering the year from May 24 to May 25. The amount comes to $2,418, including GDC, totaling 26 hours at $92 an hour, machine and driver. That amounts to about 2/3 of our actual tractor expenses for the period. In addition is the cost of running our vehicle through a muddy river on a daily basis. The upshot is we cannot continue to pay rates and pay for access maintenance, along with the higher cost of everything associated with the loss of the bridge. It is bleeding us dry. The main thing is that we require from GDC is access. We have maintained that for the past 18 months and will have to continue doing so at least until the bridge construction commences. We have urgent need of rates remission backdated to the start of 2024. At the end of our written submission, I said that it would be greatly beneficial to people at a time of high stress to be offered rates remissions, rather than a whole lot of hoops to jump through. I accept that GDC has to guard its expenditure and suggest that this could be managed as follows, learning from our experience with Gabrielle. The incoming councillors each identify an area that each will liaise with when there are problems. That councillor to make contact with affected people in a pastoral way, be empowered to recommend up to 6-month immediate rates remission based on their own assessment, backed by a small working group. During that 6 months, a full process to be worked through to establish if there's ongoing need. This sort of approach will have huge benefits for people's mental and emotional state at a high time of stress. This is from my personal experience. And then you also say from representation, we elect councillors and the mayor to represent us, not officers. We need to see councillors in a pastoral role and at community hui. Attendance at regular community hui will help to maintain the necessary tension between council governance and management. Thank you, Rob, for this. And there's also some other written submissions in our paper today. You happy for me to open the floor? Well, I'm very happy to move this paper to start off with, to open it up. Councillor Thompson and then Councillor Foster.
Yeah, I'm happy to second the paper. People have got enough stress and
Yep.
it's not going to kill council. Green there, and it's going to mean so much to them. So, yeah, I'm happy to second it.
Councillor Foster.
Yeah, for me it's a no-brainer. People have been really badly affected after those last weather events, and we've got probably more weather events to come in the future. So this is a no-brainer for people that don't have any access whatsoever. It's taken away from them, and they don't have any other council functions that they pay rates for. So yeah, I'm totally supportive.
Yeah, absolutely, we should be supporting hardship. But a question for Pauline, I mean, rates remissions haven't been a huge cost to our budget, but I mean, with accepting a lot of different avenues, more rates remission, there could be a cost to our budget. At this stage, grand is not, but is there the potential of suddenly they're starting a bit of a run on rates remission that would be a cost against that budget?
Yeah, there is those kind of considerations, which is there's underlying it's the individual circumstances to the people per se, as opposed to there may be a perceived cost of service, the road or whatever there, that is not an automatic remission associated with it, which is allows us to treat the impacts to the individual concerned. So from that per se, doesn't open up precedents, which means wholesale rates or impacts to the cost. This is kind of manageable in terms of what we're seeing.
And the other one was, I just wasn't sure whether that was approved work that he was invoicing or whether it was just an invoice out of the blue.
I don't know. This is the first time I probably saw it last night. I'd need to double check with it.
It was no approved works, no. It was, and the reason we couldn't pay it was for that reason.
Yeah.
And I would point out we spent to the tune of hundreds of thousands of dollars on maintaining some level of access for that property that's not mentioned here, nor some other accuracies within the comments, but yeah.
Okay. I know we've had some unapproved invoices come through over the time. I remember one month ago which had several zeros.
I still get those. My office still gets the handwritten invoices.
Yeah.
Rhonda, did you want to say something, or were you just waving at me?
Nā ngā wari noi hoki, it's tautoko ai tēnei pepa, me tonu kōtini.
Right. Mr. Rob Telfer, did you wave out at me?
Yeah, look, I think this is just tidies up a bit of a missing loophole in the actual remissions policy with a group of people that actually don't directly qualify with how we've got it written. So I think this is a great move.
Anyone wants to speak against that?
No, I don't want to speak against it. I think it's great, and we need to be proactive, and we need to be. I like that comment in Rob's thing about the areas of responsibility. But are we speaking generally to parts of the rate remissions as well? Have we got to that part?
You can speak to the whole paper.
The whole part. So just a question around the economic development incentivising. Does the rate remission apply to just the trial area or the whole property?
So this is the whole policy. So yep. In terms of it, you're looking on page 37. Is that what you're talking
37, economic 2. Yeah, 2 points.
The objective to promote employment and economic development by offering rates remissions to encourage existing businesses to expand and grow a new business setup. Is that what you?
Yes, and nowhere there does it specify whether it's just the trial area or the whole property gets the rate remission.
Everything would be taken into consideration. What were the increases? So if there is if the existing rates on existing land, it probably wouldn't be taken into account, but we'd be taking what is the economic impact and growth that they wanted to achieve over that period of time. So it would probably, by implication, it would be the increase, not the existing.
And page 47, where permanent crops now pay a capital rating on the value of the structure, will the council be recognising a negative value which might start to apply on grape crops, for example, in the region?
When you remove it, when you remove your structure.
Yeah, no, so that
Fiona.
Here, what we do is get our rating value to assess that. So where the crops are removed, that is taken into consideration, and the rating valuation is dropped accordingly. So it would change the remission.
Change according, because grapes are not in demand, the value would be dropping. Thank you. Another question around forestry. I've lost it though.
I'm going to come back to it.
Yeah. So if our forestry harvesting consents become so restrictive that a forestry block opts for permanent carbon, and this is in relation to page 43 in a plan change, land affected by plan change. I couldn't think we'd asked the question, but at the moment we're rating forestry because of the damage going to be done to roading. But if they change their plan and go to permanent forestry, and there will be no erosion damage, would a permanent forestry be eligible for a claim on rates, roading rates?
At the moment, the policy, when the discussion for the roading rate, which you had the higher differential with regards to forestry, that was raised. What if they were permanent cropping and they decided to have that intention that they may have, that it was decided at that particular point in time not to offer a remission on that per se, unless it was put it into a natural covenant that actually said this is ring fenced, so this is separated, as opposed to a decision that could have changed. The intention is from one landowner to put it in there for permanently, but then it could have been harvested. So, but that is part of the perhaps the revision we'll be doing in the next revenue and financing policy. Does that still hold? Is there more that perhaps are going to go into the space? What do we need to do with regards to it? But that the original intention was not to separate that out, but there could be a decision thereafter to change that within the revenue and financing
We will
policy.
totally unpack that when we start working on our 10-year plan. We will sit here for days debating different scenarios. Nadine?
And through your worship, so part of the workshop on the land use initiative, we'll be looking at what levers that council can pull or contribute to enabling transition of that vulnerable land. So that question will be about, are we prepared to look at remission?
All good, thank you.
All finished? Any more questions or queries on this paper? So I have moved the paper. Someone has seconded it. I'm away from my notes. Who seconded the paper? TD, all in favour? 1-3 carried. Thank you. Thank you, Pauline. Okay, Pauline. The Gisborne Disaster Relief Trust exemption, so that we're not a CCO. Because it gets audited through the normal processes.
It's basically like just an administration process, just rather than having more compliance or separate CCO reporting like you do from GHL. I say that the volume and the materiality of it doesn't mean that you have that degree of scrutiny. And so it's just a kind of an administration process to say, let's do in the normal things. It's still, those set of accounts are still registered under the Charities Act, but not going the full set of it.
And still audited.
It's still included in our own oversight.
Any questions or queries? Colin and then Rob.
I didn't quite hear what you said there, Pauline, but so you're saying it is internally audited?
So the difference in the process is a bit like where you have GHL, where they produce their own annual report.
Right.
Okay, in this particular case, as under a CCO, they're assisting TO, a trading organisation, because of the quantums of the volumes that we're saying, it doesn't need to have its own separate annual report and separate audit per se. It comes under the umbrella of council's set of accounts.
And this is because, under point 13, because over the measure of two accounting years, one of which is 100,000, the other of which is 2.8 million, but if you average those, two amounts, we are well over the requirement to be audited in each year. And I think that, in the voice of transparency and...
We were audited.
I think we're saying
point.
So what's all this about saving $6,000?
CCO requirements.
No, it's saying going forward, we were saying in the previous 2 years, we were over that amount, so we did do that process. But in this particular ones, we're saying that the volume and the things that are in there, it doesn't warrant to be have a separate annual report. So bear in mind, it's not an average, it's set in law, it's set it out, it's either of 2 years for the actual thresholds. So it is stated quite categorically, those are the thresholds, and at this particular ones, where it is, we're actually, it's under that threshold, so there's a discretion for council to say that it doesn't need its own separate annual report because of the materiality of the transactions that are there.
Yeah, I was on the same, my question was exactly the same as Colin, because it, from point 12 through to point 14, it doesn't actually make sense to me. I read it as if over the previous, it says over the previous two accounting periods, if it's over, it must be audited by a qualified auditor if it's over 1.1 million, and yet the 2024-23 period was 2.8. I'm just struggling to see where.
So the last 2 years has been audited. And so the provision, and so the standard, and it says within it, you must have it audited if in those last 2 years you're over that quantum. So we've done that. But this year we're saying it won't reach that threshold, and even in the last year, and this year, it won't reach that, so there is no need to have those separate accounting annual report for the CCO.
We looked at the audit and signed it off. Yeah.
So the 23 year and the 24 year have both been audited.
Yes, and they've been, the papers have come.
We signed it
also
as a council.
and out on our websites and released to the public.
Okay, I didn't see it that clearly in there, I'm afraid, sorry.
Any more questions or queries of Pauline so that everyone is clear on what we are doing here? No. Did I have a mover and a seconder? I have Councillor Cranston and Councillor Gregory. Any more questions? Not. All in favour? Aye. Carried. Thank you. Okay, this is an interesting paper. The page 89, the rates and sundry invoice debt management, that takes us to the end of our financial year 2025. So Pauline, I'm going to open up for you and then we open up the floor.
Sure. So what, there's obviously a number of things in here, but we register most of the, obviously the pertinent ones is our rates debt. And we sort of signal what is it in dollar terms, but we also say in percentage of the total amounts we collect in rates. That's kind of the collectability, because as your rates go up, your amount of debt, absolute debt, may also go up. And so it has increased pretty much. Merrifield Land is sort of trending down, which is great in terms of the changes in the legislation and our ability to write off some of the rates, which are non-rateable in some of those cases. But general land has increased over from the 5.5 to 6.1%. The kind of the underlying aspects of it, there's nearly around about 800k within that threshold, which were pending from legal other separate court cases which were caught up in our ability to collect some of those rates. We have proceeding for other measures to be able to collect those from those different court cases. When you take that into account, and if they are successful, however we're proceeding, we kind of go back to that 5.1%. So you say that the chunk of some of the increases from the general land has been pending from some of those bigger rates arrears. But that's probably the main trends or difference that we've actually got here. But happy to take, there's a lot more in this paper about anything else. I was just bringing that up to your attention.
Thank you for that. Thank you for an interesting paper. Okay, I'm going to open the floor. Any questions or queries from councillors, or is it quite straightforward? Take your time, no rush. Rob.
Yeah, couple of questions. First one, page 92.18 and 19. States here that if legal action to recover unpaid debt must be initiated within 6 years, and then point 19 goes on to say 2024-25 financial year rates debts totaling 800,000 was written off. Was that debt tried to be recovered, or it just wasn't? That 800,000 that's written off, has that been through a legal process to try and recover it?
In terms of it, the process, yes, definitely. Each year, if there's debt outstanding, you're receiving notifications, and it says in that what are the processes, what do we do? So every year we do that, but if there has been no arrangements or anything associated with it, it becomes beyond the 6 years, and you can't then proceed it through debt collecting agencies.
So it's statute barred?
Yeah, it's statute barred. So you can't, and unless they've entered into arrangements at that particular point in time, after that you have to write those things out. It's statute barred from the 6 years. But we do everything that we possibly can, especially each year as the debt has occurred, and enter into arrangements with the people. But that becomes the write-off if we have not collected that prior to 7 years.
Can people then just hold out
Yeah, that's what I was going to say.
for 6 years?
No, people know that.
You know what I'm saying? We try to collect from someone. We don't often, nearly never, take steps to take someone's property. We haven't done that a lot. So can people, if you say to them, hey Rob, you owe us $50,000, can Rob just ignore us for 6 years because he then knows after 6 years it's statute barred and we have to write it off? Just asking.
But potentially you could. However, you would be going to Bay Court, and then there is other things. If there's a kind of an abandonment of the land, we're not paying those kind of things, or you're not paying those, there can be further, more stringent processes that you actually can to retain it. So, and you take that into account if a person's kind of walked away and not paying those kind of rates. So. And in most cases...
Yeah, we would go to the district court and get a judgment, those ones that would stop that process.
Mm.
So,
Stop the statute bar process. Okay, oh, I didn't realise you could have it stopped.
as long as you've registered it in the court, it will stop that.
Clock running out.
Yeah. It's when you can't collect it, you can't find the people, there's no funds, or there's a process that we go through before it gets to that point. So they're trying to collect it every year. And some of them are ones that are what's called Section 93 under the Local Government Rating Act, and that's where on Māori freehold land they don't have to pay the rates if the funds aren't coming from the land. So
if the land is not generating anything, you don't have to pay the rates.
Yeah, and well, they pay the rates to the extent that it is being generated, and then of course that accumulates, and that's included in the write-off.
So the other question would be,
Go for it, Larry, go for it.
Of that $804,000, how much is that with general rates, and how much is that of write-off of Māori land rates?
We'd have to go and have a look specifically.
I mean, that would be certainly a valid question, wouldn't it?
I think predominantly it was Māori freehold land in those particular cases, but in some of those cases, unfortunately, we had the punitive penalties that we were adding, and some of them may have been in there. And so when you're building up for those years, when we start to get...
Part of that would be penalties that were...
Yeah, that was, So that's why it kind of a money go around in terms of those parts of it. So we've changed those policies, and you can actually start to see from where that peak was on page 92 in the top graph, where those penalties were in there. That's basically, you were trying to say that was most of the things making up the debt.
Sort of following on really, are many of these non-payers on a conveyor belt? Like they've got to for 6 years, that's been written off, but they're still on a conveyor belt of having to pay rate, supposedly having to pay rates, but not. So they're still going to be on this conveyor belt.
We still pursue it. We still go out there and we make a lot of contact with people and try to get the money in. It's not that we're not trying.
Yeah, I understand.
And in some cases, there are particular circumstances where they have built up, but if there is a hardship or whatever the circumstances that occurred for the individual, you look in those particular cases, and it may be a reset in terms of that first part, but then you can see they've got over that initial, and they are then keeping on top going forward. So that's what we're trying to work towards there, as opposed to the persons that would be where we have in the 800 odd K that is outstanding, that we're helping those that are actually really trying to, well, the circumstances beyond their control, how do we actually get them back on track, as opposed to the person who makes no attempt. And then that's we have to take the other degrees that's open to us to be able to pursue that rates.
Yeah, I think that's the question, is how many of them are not making an attempt? What proportion of those are not making an attempt?
Yeah, well, we do engage with Bay Corp to go out to those people and contact them. So we ring them.
So if we're looking at it in some of the circumstances, we'd probably have 23,000 ratepayers. And then there might be some that we're actually looking to pursue harder, but it would be one of these A3 size, so you maybe 25, 30 that you're actually saying, okay, what is the circumstances that we need to consider for those? So the majority of people are making those payments on a per monthly, how they can do it. It's just the part, and while we're looking at 10 million, a lot of that's current debt. You know, this is within this financial year, it's just some of the others. So yeah, that's a distinguishing part, what is actually long-term debt. And for those that are beyond that, it's looking at the other remedies that we have available.
Thank you, Chair. So these are quite disturbing trends, these lines going up almost exponentially, but not quite. Would be interesting to see another graph alongside here, and that is our recent rate remissions for hardship. Can you offhand tell me what the shape of that graph is?
So you've got in there, in terms of what we've given, is in total rates, which is in rates remissions under 33, is 1.4 million.
But that's not our money, hey, Pauline. Rates remissions for hardship is DIA money.
No, this is rates remissions, the rates remission
That
policies,
we
and
have
then
given.
there's the rates rebate.
Oh, the rebate is what I'm talking
Yeah,
about.
the counts, that is central government initiative. If you're under a certain income threshold, you may be able to.
Yeah, I confused those two now, yeah.
So that's 1.4, that's around about being on that level, around 1.1 to around 0.4, 1.5 million for a number of years.
So that has moved. And what about the government
Not much
subsidised?
movement, but sorry.
The government subsidised one you mentioned?
I think that's in there.
Rate rebate.
Yeah.
So
28.
We did 1,721 rate rebates for the 24-25 year, and that was worth 1.26 million.
And has that trend moving? Is it
Yep,
moving?
I actually wrote down the rebate numbers before I came in, and so just since the 1st of July for the new financial year, we've already done 930 rate rebates worth 728,000 in the first 2 months of this year. So
We're pushing it hard.
Yeah, and the government changed the way the rate rebate scheme worked, so it extended,
On page 93.
a higher level of, a higher threshold of people's income so that there would be more people receiving a rebate. At this stage, it certainly looks like we probably up about 100 compared to the same time last year.
You know, just in my mind, these are trends that are suggesting that our rates are becoming more and more unaffordable. Right, thank you.
Rhonda.
Kia ora, thank you very much for the report. Thank you also too for the disaggregation of Māori land in relation to general land. Can you point us to point 17 on page 91 and looking at that graph there? I want to understand from the period 2019 that if we add the green line and the blue line, that's 16.4%, and then we move sharply to the 2025 period of 6%. How fabulous. That's a decline quite steadily. Therefore, something's changed in practice and policy. What changed in practice and policy for us to move from 16.4% combined to 6% rates owing and outstanding? Something great has happened.
Through the Chair, first of all, the Local Government Rating Act changed, and they made provisions where Māori freehold land was unused. It could now become non-rateable. So that's one of the big provisions. And also, we stopped the additional penalties that we were putting on throughout the year that were in addition to the 10% each quarter. So those are probably the two main things.
Fantastic. If I might put a supplementary, can we go to page 97? And I want to refer to general land and Māori land, and specifically the middle bar there that goes aged rates debt in relation to general land comparison to Māori land, and see something great happened there too, why we decreased as in Māori freehold landowners to 1 million debt, and for the first time we're not as high as general land. What would have caused that?
Same reason, same things.
The decrease through that act, being able to take away penalties and not being able to rate lands that don't have any economic interest to generate payment.
The penalties were a council decision, the other change was the rating act.
Thank you very much. And then finally, if I might, the graph underneath that, can you explain that please so I can understand it better? Māori freehold land rates and the 18% down to the 13.8% from 2018 to 2025. That downward trend, is it the same reason that we've been giving that
yes.
declines? Yep. So that's a system change?
Yes, well it's an overarching acts that have changed, plus we also had our strategic review of Māori freehold land, and out of that we changed some of our rate revision policies.
Kia ora. I just want to say thank you very much for all the work that's been done in that area, and simply because here in the Tairāwhiti, we're one of the unusual situations where much of our Māori land is still freehold and in Māori people's hands, so that makes a big difference for this area, especially if we're to talk about being able to realise in the future the elevation of the entire region in terms of its economic capability. So kei te mihi atu, thank you for the graphs are fantastic. They show that there's been a decline. You've provided clarity in the reasons why this has been able to be achieved, and that's exciting. Thank you.
It is good results to see that.
Yeah, I'm still a little bit confused on this Whenua Maori land, on what land qualifies for basically non-rates. It's not all necessarily unusable land, is it?
There are certain classifications within the Rating Act which say if you meet this criteria, then the land can be recognised as being unused. And I can distribute that if you like. It's not that it's unusable. If it's not being used, that is the reason for it being non-rateable.
Okay, so if that's correct, this policy is actually a disincentive for Maori to actually develop this land and so it can turn a profit and pay rates.
We do.
While you're not being rated for it, if you're being rated for it, then you have to earn some money to pay those rates. And I see that as a disincentive in a way, and like the floor's open if people disagree, but I see that as a disincentive if it's actually usable rates. If you've got a block of land where right next door someone is, I don't know, doing something that's producing a good return, the land is exactly the same, that land is not unusable. It's actually the mechanism to be able to use it. And if you are not required to pay rates on it because it's not being used, that's almost an incentive to not bother going out and finding a way of making it. So am I reading that wrong or not? Because if it is, then we should be going back to government and saying this actual loophole needs to be looked at, because we want to incentivise people to contribute and develop land, and if we need to change the mechanism of being able to borrow money or whatever to be able to do that, then that's something that probably needs to be looked at. Yeah.
I'm just going to go Josh and then Rhonda. Thank you.
Thank you very much, Your Worship. I think it's probably worthwhile our finance ops taking the councillors through the journey of how all of this past Māori land was assessed, because the vast majority of it was landlocked or unproductive or not able to get gone to, etc., etc. So there were a lot of steps and gates to kind of go through in order to be able to land where the government has landed, and also for us to massively support the direction that they were going, because it was something that we've known as a region for a long time, that there are vast tracts of land that are just impossible for Māori to be able to make productive. So that would be my request, is for us as a council and our ops to actually take our current city. I mean, we're almost this current council is almost is almost about to be replaced by a new one, but it's worth the conversation and the education piece, maybe in the next induction, in order for us to be able to truly understand the position of Māori land around here, because a lot of it is inaccessible, and it's something that as a council we were saying, hey man, we can't fairly rate on all of these bits of land, and they can't even access them, So like painting the full picture, I think will be really helpful for the next council, which the majority of
Because we definitely had a better understanding, because the whenua rahui stuff that we used to deal with are now passed over by law to the CEO, so it wasn't necessary really for this council to discuss it. Is that correct, Nadine?
Yeah, and through your worship, I mean, there's been probably a decade worth of investigations go into this by government, just so, and with the changes that kind of landed under the previous government, was around ensuring that the economic, social, cultural, structural issues to fairness and equities on Māori freehold land were addressed, because the rating system were in fact stifling any incentives to do economic development. So there were multiple, I would have to pull up all the different things that they triggered in there to try and make it less burdensome, recognise the alienation that occurred and the inequities in the system, but also try and find mechanisms to stimulate economic development through different tools that local authorities could apply. So there's been a whole lot of work in this space, and then we, prior to those changes, had done some work on our own rates policies and how they could be more enabling of economic development and incentivising on freehold land where we could. So there's probably some information we could bring back, as Councillor Wharehinga was saying, to the next council.
Yeah, with that, there was a significant review we did with the Maori freehold land with Darren Ponta, and we can, it gave you the conditions and the set and the rationale of why legislation changed and what was the inequities and the difficulties that were associated with that. So there was a fairly robust background to that. But if you even look within the paper itself, when we got the rates remission policy, which you've got on pages 53 to 56, That was our way to incentivise, to actually use the land, unlock it, as opposed to a lot of the way that we addressed it before was punitive. It wasn't paid, but there was no ability to move forward. And what we've found with that change in working, we've unlocked and we've changed that collectability and the ability to work the land, and more has increased. So there is definitely some unintended consequences of what we had before. So as part of that whole review that came, making sure that we were doing in terms of legislation, but what did we need to do, and how do we actually need to make those changes within our own policies. We can definitely send out that work that was done before, and we can actually as part of the induction process, make sure that that's discussed, so there's an understanding associated with it. But definitely that paper was a fairly chunky piece of work that was done from beginning to end as an external review of where we were, and trying to incentivise using the land.
So, supplementary. So on that, could we have some examples of, like, if that's the reason behind it was to actually take away the punitive side of it to actually help enable, can we have some examples of how that's worked? And because if we just do policies and the years tick by, and if it hasn't worked for the reason it was explained, then are we really helping Merredin by, if you're not paying rates on it, there's no need to the way I look at it, need to actually try and make this productive, if it is potentially productive land. So I'd like to see some examples of how that has worked on different blocks of land. That would be quite,
Just to do probably the reviews, but as a high level, you can see that rates of collectability has completely changed from where it was, and getting depth in there. That's a high level, but in terms of probably other leases and things that we've actually seen that has increased, there wouldn't be. We can give high level stats but we'll refer back to the original review that was done, Darren Ponter, and then we might say if there's any other high level information, economic relation to that, as well as also perhaps on general land as well, so there's a comparison to the use and things as well.
Okay.
Tēnā koe me te tō whakaaro, Councillor Taufa. I think that what you raise is a really important distinction between much the same stuff that we received with Jane at the beginning of our term. That the same situation we learnt there is a situation which applies to Māori land, and it would be in our best interest for councillors coming in to understand that situation. Equally, as we got to see how the district councils were formed to where they are today, we need to understand what happened to Māori land in order to understand the predicament it finds itself today. Without that, questions from your side in general land will always come fast and furious with an assumption that our land has the same rules applied to it, where the legislations since time began of alienation show that that has not been the treatment afforded to Māori landowners. That's why I think it's a great question for you to ask. Also too, this applies to all forms of capital, but until we get generalised understanding by those who don't know and do not have Māori land holdings, you could never begin to understand what are the implications that keep us locked out of equitable opportunities to be able to access capital and develop our capabilities in the economy. So I really welcome that it becomes a very important piece of work, and that the council, through you, your worship, make sure that we do get the proper learning about what has been the historical journey of Māori in relation to Māori land and the raising of capital, and what has stopped us from being economically as viable as we would have wished to have been, as we'd hoped to be. So I strongly, strongly recommend that that becomes a first up in the next set of councillors coming through, because without that, as we move forward to economic viability of this region, councillors cannot be sitting at this table not knowing that history.
And this is what I referred to
Keeps you out
earlier.
of the game, to understanding our side.
The previous council definitely had a lot of information around that because I don't remember when I joined council, we would have a whole finance meeting for hours to discuss each whenua rahui and over time. So there was a real deep understanding what Rhonda referred to about the land block and why there was no economic activity and the finances not being available. This council have not done this because we have moved to a different system, but we will do that again. You've got a supplementary question. Go
I want it understood from where I was coming. This was about, are we doing marriedom justice by the rules that we have got? It was done for a specific reason, and has that worked? Because if it hasn't, leaving it in place, or maybe adapting it in a way so that, because I'll guarantee you that all whenua Maori land is not the same. There are different blocks that could be treated differently. So
They are definitely. If you don't make any money, you treat it in it. If you're not able to make any money, or because of your structure, because there might be 700 owners, you can never secure a mortgage on that land. You can never get money the way you and I can get money to build a house. So there are hurdles up that we as a previous council definitely worked with intimately, and now the legislation has changed, national legislation, which now some of that land we don't have to debate all the time. They are not going to make money. There are Māori land that make huge bucks and they pay huge rates and they make a lot of money and they contribute hugely to our economy. So it is individually treated, hey Fiona?
Yes, that's correct.
But we will talk more about that. I understand where you're coming from. We do have a deeper understanding because we used to work with it a lot. In the last term it was not an issue. But we will definitely touch on that again, Councillor Talfa.
Okay.
Any other questions?
Has the paper been moved? Because if not, I
I
will.
don't think it's been moved yet. Any other questions or queries?
Maybe the second.
Thank you, Councillor Foster. All in favour?
Aye.
Contrary? Carried. Okay, now we move to our two papers that we always have on our agenda, our standard papers. Thank you, as always, for the notes. We go to our Treasury report first, which is on page 100.
So this is, as you say, it's a staying one, but this is, because it's cash, you can actually, and there is no accounting kind of changes within it. That is our position that we will be saying in the annual report, 24-25 as at the 30th of June. And it's saying the external debt is 198 million, basically to compete to 195. But overall net is within a program which is pretty much this is technical in terms of what the other things there. It says we're in policies that we're required to actually have like swaps, which is like your insurance policy. If our interest rates goes up higher than what we expected, kind of reduces that upswing of the overall course. So it is a technical paper. It talks about the policies, but effectively it says as at the 30th of June, we're tracking with all the policies and to what our debt is expected to be. Happy to take any questions.
Questions? Quite straightforward, like I say, we get these and we get the explanatory notes with them. Anything that people would like to ask questions about?
I move.
Now is a second. Moved by Councillor Wharehinga, seconded by Councillor Ria. All in favour?
Aye.
Go, Paul, go.
No, I was just going to ask a question around employee expenses and benefits.
That's the next one.
Yeah.
We're nearly there.
Oh, sorry.
All in favour? Contrary, carried. Okay. Finance and affordability, that is on page 108.
So, just to say that this is very much a draft in terms of the process. Normally, we would be trying to give you a draft in the middle of September, so it's a couple of weeks even earlier than what we would be saying. So, what we say, usually at this particular point in time, the end of the financial year, you kind of look at the payments and you try to get to what we call a final trial balance, which is before we start to do all our statements. That is still working on. I think it'll probably be today or tomorrow that that's completed. So this is a draft.
Right.
And it's trying to signal before any of those changes or any other evaluations that come through, we're signalling what are the main parts where we expect to be by the end of the year. And most of those things that we said, that the differences is, which we've been saying prior to this, these other meetings or even our reports are signalling the same sort of things, which is the timing and the phasing of capital projects which were grant funded is different from when we set it up in the November 2023 when we were doing the long-term plan. At that particular point in time, there was very much of a high level based on what we had been doing, but the terms of processes changed as we're doing it. So last year, as it's sort of said, we did 20 million more than what we expected. We had funding for it, so there was no adverse pack. But this year we're saying, okay, due to the timing of things, $47 million relating to some of the roading projects is not the same as what we have done. But to date, for the roading that has been completed was about 43 million. I think for this year we have done 43, but we estimated to do kind of the 65. But we did more last year, and we said we need to transfer some of that over into next year. So it's timing kind of issues. Basically, that and swaps, which may or may not be realised in the future, and then the other main difference to account for within the net surplus to plan is just the reallocation grants, which was $1 million with our 50% share. That's basically the high level of the differences of what we said we're going to do. This is where we are. Happy to, and that may be, sorry, apologies if that was kind of confusing, but happy to take any questions associated with it.
Yeah, just on page 112, it is quite worrying that our deficit variance there of $34 million. If we go back up to grants and subsidies, that's basically the amount that we budgeted on coming in that didn't come in. Is that a trend, or is that, to be $30 million out there, that transfers down to the basic, that is the variance?
Yes.
So, the reasons behind that, and can we expect that again this coming financial year?
So just go back to, in the main summary of it, how it was, this is the kind of the first year of the long-term plan, and the long-term plan was set November, December 2023, and that was really in the midst of Gabrielle, and we had the rain right up to the June that was occurring, and so the roads weren't open to be able to assess what we're going to do and where we were going to do it. So we only made a provision within that 3 years of the grant funding that we would get from central government, which was 125. We divided it, said, okay, over the 3 years, we'll make a provision. This is where it needs to occur. So in the annual plan for next year, we adjusted it based on better information on when we're doing the work and the program of work. So the annual plan allows you to get better information rather than the provision that we provided. And that is, as it said, the predominant part of that was 30 million for emergency works for roading and a 35 provision for, in terms of the recovery program per se. That's basically the differences of where we expect it to be. It's a timing issue, trying to match the 30th of June. Where do we expect? We did in the previous year 20 million more than what we expected. We're doing less than what we expected, but we'll catch up forecast into next year. Doesn't affect our bottom in terms of cash flow. It's just saying it's a surplus up there. We expect to have that, which would go against the capital projects, and it registered as a difference to what we expected, but it doesn't affect our cash flow. It's just a point in time from accounting how we provision for it.
Any more questions for Pauline?
Yeah, it's around the employee benefits. Taking the figure from page 112 at 34 million, which is under budget. The budget was 37 million. But then when you scoot down to page 115 and note 8, employee benefits liabilities, we have a 5 million in there as liabilities, which is 1.7 over the budget. And I've gone back through other years, and that's an unusually high liability figure. Is there an explanation for it being so high?
It's usually just the amount of people that have taken leave, and what if they haven't taken the leave within that year, it will increase accordingly. So the employee benefit, the first one is the actual expenditure. That is just, okay, what is leave that needs to be recognised that hasn't been taken in the period.
But so, I mean, if you want to look at what the wages actually is, you should really be adding 1.7 to the 34.
Oh, it's a time, no, that's in the position, no. It's something that we may have to pay in the future, but then it may be recognised within the costs and the overall budgets, and you tend to, that takes into account because you're provisioning for your employee benefits and the expenses, should take that into account. Yeah.
It's not on top of it.
No, it's basically, well, if it's takes leave in the next year,
it's
they'll
accounted
pay.
for.
They'll be paid in the employee costs.
Yeah.
So it just reduces that. Yeah.
Okay, any last questions? Councillor Foster.
Yeah, page 119, thanks. $7.1 million cost incurred, majority related to the purchase of property for a new resource recovery centre. Are we progressing satisfactorily on what we've purchased? And,
Can we just talk about the finances? We're not going to have an operational meeting here. Okay? Do you have a financial question in regards to that? Any other questions on our statement on page 115, or the paper on, let me go to the front. Page 108, it's a noting report. I'm happy to move that. Seconded by Councillor Wharehinga. Any last questions? If not, all in favour? Contrary, carried. I bring this meeting to an end.